What's up, fam? How long will this market continue to keep tanking? I mean, I'm getting tired of the red days and it just won't quit. It's unbelievable. It's red here. Oh, we might get a little green there. Then it's red here, red over there, red over here, sinking. In this video, we need to discuss why are these markets tanking once again. We have to get to the bottom of what we keep on seeing with these red days, and when are our green days coming back? When is that money printer coming? We need it back. Jeez, we need it back. In all seriousness though, we have to discuss what Fed Chairman Jerome Powell and Treasury Secretary Yellen keeps on messing the market up. Every time they open their mouths, they just mess the market up. And today is no other different today than anything else. They was testifying on Capitol Hill today again, and they was discussing the United States economic health as they see it from their perspective. So what happened? What made the market fluctuate as much as it did today? And why are we now talking about Fed Chairman Jay Powell once again with the market tanking? Well, it all starts with him being asked by Senator Pat Toomey from Pennsylvania about what's going on with the job decline, even though people are optimistic about the economic outlook. Well, Fed Chairman Jay Powell say, hey, the unemployment doesn't go down when we have new people joining the job market, job force looking for jobs, and the participation from them is going to expand the unemployment rate even longer, and it's a better desirable outcome. And that means basically that the job market is actually in good shape, that it is getting stronger. I mean, what could you ask for more? More people looking for jobs when the economy is supposed to be attempting to rebound to a recovery level prior to the pandemic. Which means exactly that new additions to the workforce are going to be accounted for as part of the labor force. And well, we're just got to deal with them not having a job just yet as well. But they will eventually probably get one. So what does this mean and how does it affect the stock market on an economic level? But first, you got to do yourself a favor. You got to subscribe to the channel. You got to smash the like button. You got to ring that notification bell so you'll be notified every time I drop fire content like this. So what are my thoughts on the economic recovery and the stock markets? Well, I view Chairman Powell's testimony to be very positive and even reasonable, and it should be viewed as exciting in my opinion. But the markets just don't see it that way. They expect for this to happen, and you got to be able to understand they're going to respond incorrectly. Should we expect anything less? If you have been following my channel for the longest right now, you would know that I'm very bullish about the economic recovery. But my reaction to the unemployment rate not going down soon enough based on percentage basis is not going to be considered fundamentally sound, because I think it's silly that people keep on looking at percentages on a lot of these stats that we have out here. Here's another one. The Bureau of Labor Statistics says in February 2021 employment situation that 4.2 million people were prevented from looking for work due to the pandemic. Now, this number is defined by those who are actively looking for work or are being actually temporarily laid off. So to me, this data means that more Americans are looking for employment who hope at some point in time this year to gain employment, which is in line with what Chairman Powell stated. So honestly, I don't understand why people just can't be patient and understand how the market needs to flow from this. But as institutional investors do, they always want to hear the money printer should be printing, that it should match what the economy is doing. And there's a disconnect. There's the disconnect between the 10-year treasury yields and what investors think and what's going on in the market. So we're living through another short-term pain in the market, in my perspective. And now that lets me understand that we should be considering buying more on a dip. I want you to consider to keep investing in equities. This may be able to prevent you from missing out on buying opportunities in the market. See, if you are looking at investment opportunities due to all the pain that we're experiencing in this market currently, you're going to understand that it's just another crazy year and one day from the moment when the world completely stopped just a year ago. And this should stir us up a lot of feelings that in certain sectors that a lot of people think that we should have already recovered, and they've moved their money into those sectors. Well, the market is prospering in a lot of ways, but it's very erratic in my perspective. So to understand where I'm coming from, I'm telling you that these stocks are some of the hardest stocks that we're going to cover right now that have been hit, and they're starting to trend into price targets that a lot of people are considering to nibble, and I'm one of those people. I don't want you buying boatloads of any stocks right now because we don't know how long this pain is going to last. But nibbling is actually the best way to go about it. I'm going to quickly cover a lot of these stocks. I'm not going to give fundamental analysis or any of my thesis on these stocks right now, because if you want any of that, leave me a comment down below with the stock symbol that you prefer, and I will bring you that in future bangers like I'm going to bring you right now. So look, we are already at a point where we have to come in and knock out these stocks, and let's do what we always got to do. We got to stay ready so you never have to get ready. You got to think like a shark. So we got to have our mindset ready to go while we strike while it's blood in the water while everyone else is running for the hills. The first stock that we're going to start with is Agora, API. It's down 11.5% this week, y'all. CRISPR, CRSP, our ARC Funds investment opportunity, down another 12.5%. Lucid Motor SPAC, Churchill Capital, 22.5% down on the week. Disney, just covered this one, down another 5%. With Etsy following along right behind it, down another 9%. We're talking about Square this week is down 14%, and it's just Wednesday. Neo down another 18%, and it's just Wednesday this week. Palantir is going to be a giant of a stock. It's down over 13% as well. With Tesla bringing in almost 10% down on the week. And my favorite stock that I like to talk about every week, Airbnb, down another 11%. People, understand, equities are eventually going to make another run, so you have to consider nibbling at the opportunity right now. That's why we have to stay ready, though. See, don't forget what I tell you all the time. The sell button is broke. We don't ever regret selling because we don't sell on red. We only make profits from the market. We don't do paper losses. If you are that type of person who considers that they have to look at their portfolio just to see the bleeding because it hurts so bad, do me a favor. Go for a walk. Read a book. Binge watch your favorite TV series, because I need you to do something else besides criticize what your Weibo account looks like. Matter of fact, that reminds me. Get your 2 free stocks with Weibo if you want to feel the unpleasurable feeling that I feel in the market every week when it's going on red days. You can find that link down below in the description below. But in all seriousness, do yourself a favor and do something else like, hey, pull up a 10K filing, pull up a 10Q filing, and research your next company that you think that you're going to make an analysis on, or you need to make a fundamental investment with, and understand how you can buy that stock on discount. And if it's even worth your money, because these are the real ways to get yourself out of thinking about why the market is tanking and understand what is going on. Because the real question that you need to be asking yourself, why is the market tanking? And when will it stop? And when are we going back to the moon? Because that's really all that matters. That when were we going to start saying our money printer back? Because that's what really matters. And as long as Jay Powell and we keep Secretary of Treasury Janet Yellen on the sidelines, not talking about the state of the economy, we should bounce back. Now, inflation is going to be an issue, but that's another video for another day. We're going to talk about that in another video. So with that, I guess you have to stay tuned. All right, fam. Until next time, I'll catch you in the next one. Peace.